to Trading Together. I'm Mel Gacee. Today is Monday and it is January the 26th. How was everybody's weekend? How did you guys all do this weekend? I'm in not today. I'm in mourning. My Broncos lost in the playoff game. That was very sad. But it was a lot of fun. I hung out with my family and we did a bunch of finger foods and had made a party out of it. So it was a lot of fun. Did you guys see the crazy winter storm? I mean, those poor guys trying to play with that covering the field, but it was a lot of fun. So, well, Anna is here. Bill is here. Good. Thanks for saying hi. I do appreciate it. We're going to right now. So let me fix my a little better. There we go. VIX is kind of at its flat line is what I call the area of and in this case Friday's close. So the day before close and where we open today is where the gap gets created. When we are trading at yesterday or the day before's close, I call that the flat line. It's just I have my own weird vocabulary. Basically, the VIX at its flat line just under a little bit, right? Just slightly negative. All right, good morning, Gavilan. And Wix, good to see you. Appreciate you. Anna saying her brother lives in New York, so I've got family in Tennessee. They really took quite the shock, freezing temperatures, and they're used to that over there. It shuts everything down. They're without power. My nephew's got little ones and it's everything is shut down, no power. I think they huddled last night in sleeping bags, so it's just brutal. It's been brutal for them. Aggie, good morning, and I appreciate you guys being here. Storm, and I hope everybody stays safe, right? And it's been here in Colorado, it's been below zero with the wind. So really, really wild. I was driving home last night after the playoff game and it was quite slick, very, very cold here. So, all right, let's talk about this market. What do we have? So what was interesting is last night, as you all know, I track pre-market, I track yesterday or Friday's highs and lows. So those things are important to me. What was interesting is, let me zoom out a bit and I'll show you our pre-market low was pretty low, all the way down here at 686. So that's, we're 60 points really from where we're trading right now, as counted on the SPX, $6 on the SPY. So a decent distance from where our overnight low was. However, it's been a strong showing this morning. You can see right out of the gate, we got this strong push. I did trade this push, made some money on it. And I also day traded USAR, which is a rare earth minerals ticker. And I was able to make some money on that one. I guess, I think the US took a stake in the rare earth mineral. So 16% positive today, USAR is. So I made a little money day trading that. I've traded a couple of calls today. No puts for me yet today. So let's take a look. I've taken, like I said, a couple of calls, no puts. And so right now, what we've got is this push at the open, a little flattening, another push, a little flattening. So that's what's happening right here. We're getting a little flattening. The VWAP is slowly rising. There's a big pop on the VIX. Let's see if we get a drop here real quick. Sometimes the VIX will pop off before the market changes. Let's see if we get a little drop here. Let's watch it. A nice little pop there on the VIX. And so for me right now, the trade is called to the upside when we roll over. So right now the MACD is red. We are moving down a bit. So I would not be trading any calls right now with the MACD red. We have our whole moving average also moving down, and we've got our VIX giving us a little blinker, right? It's a little blinker, our little side view mirror telling us we could move down. And here's a little move down. So it's not big. It's just coming down a little bit. But no puts for me until we cross the VWAP, just because this has been a bullish open so far. So we've come up, we've hit 693.4 as our high of day. And as of right now, still bullish. Now, this certainly does resemble what? What would you all say this pattern resembles? I'm sure you all know it. This pattern is resembling a head and shoulders. On the minute chart, it's very noisy, so I take these patterns with less of a grain of salt, right? Because it's a minute chart, it can be noisy, it can give false signals, but the patterns do play out a lot of the times. So this is a classic head and shoulders, a little bit of a double shoulder here, but you could call that one shoulder. I'll show you how we draw the head and shoulders. Get my drawing tool out. This is the left shoulder. This is the head. This is the right shoulder. This is what we call the neckline right there. That's the neckline. So we would expect for the price to drop. Traditional technical read is the distance between the head and the neck, and then again to the downside. So take the distance from the head to the neck and then plot that to the downside. That's what the traditional head and shoulders would say. Now, I don't really, like I said, because it's a minute chart, I'm going to take it with a bit of a grain of salt, but I'm just showing you what the pattern looks like and how we read it. That's how we read the head and shoulders. All right. So let me remove these because they are distracting, but you see the idea, right? All right. So right now, no trade for me. What I need to see is either this MACD needs to roll over to the upside, and we don't have a lot of room to the top. So this, I might not take a call, even if the MACD did roll up to the upside. So it's red, but it's starting to darken up. So you can and get darker. It's telling you that this downward move is getting a little tired. We're losing a little momentum, and we can see by the volume that that's true. Had a big volume spike here as we turned downward, and then we just kind of went, just kind of lost the volume there. So the momentum, volatility is not really there on this move. And again, it's a minute chart. It's noisy. We don't, we have to take these patterns a little, we have to zoom out still and get a feel. But now the MACD is starting to brighten up again. My point was, I wouldn't have taken a call if we turned and moved up with the MACD. If the MACD turns green, like it is over here, I might not have taken a call anyway, because we're not very far from our current high of day, which is sitting at 693.4. We are roughly 7 points away, or basically 70 cents away on the SPY. It's not really enough room to make a decent profit. In other words, the risk is a little too high because, okay, here we go. We're starting to curl up a little bit. The moving average is starting to curl up here. So that's what I'm watching. But we've only got, like I said, 70, 60 cents to get to this high. Is that enough to make the risk worth it? Because the risk is we hit the high and we reverse back down again. So we've got the high here. We almost hit the high here, reversed. So what are the odds that we come up here, hit the high, and then reverse again? It could happen, right? Especially if we're ranging. So for me, the risk in taking the call here might be a little too great. Now, could we push up through 693? Yes. And we do have volume overhead that says we could go higher than 693. In fact, we could get as high as 695. So what I might want to wait and see is, do we hit 693.4 and then beat it on another leg up and then maybe take a call at that point? Now, if we continue this downward, right now we're a little bit downward. If we continue that, I wouldn't consider puts until we break this VWAP, and not just a little break. I don't want to see a little, what we call look below and fail, right? That's when you break a certain level and then absolutely recover it. Or you're coming from the underside, hitting the resistance, you break through it and then gets rejected. So we call that a look above and fail, or a look below and fail. And so I would wait. If I were to trade a put, I would wait for a good break of this VWAP, not just a look below and fail. So also looking for a break of this high, maybe not just a turn of the MACD. I'm 50-50 on a call here. I want to see the MACD turn, and it hasn't done that yet. Again, there's just not a ton of room. Could we make it? Yes. We could probably make, if it stopped here at this high or this high, we might make somewhere between 5 and 8%. Is that enough to make the risk worth it? Maybe, maybe not. All right. So while we're kind of waiting, so right now it's doing its little range thing. You can see it's just kind of sideways, a little bit up, a little bit down, but by and large sideways. If you zoom out, you'll see it, right? There we go. You can sort of see it. It's down and up, but mostly sitting right here, right in the middle. That's the range, right where we're sitting. So I'm going to give this a minute to show us what direction we're going in, because right now it's sideways. The MACD hasn't quite rolled over. The hull is starting to give us a little push up, so I'm paying attention to that, but the MACD has not confirmed it yet. So in the meantime, we just analyze a little bit here. All right, USAR coming back down. Where did silver go? Did I lose silver on my list? I think I did. I was watching silver today because it was having a great push higher. There it is, 10%, guys, on silver. So any of you guys that traded silver, congrats to you. What a great trade it has been. Silver is floating very high above the short-term averages. So last I analyzed that chart on the daily, it was very, very high above the shortest averages, which I would expect for it to give a small pullback and revert back to those averages a little bit more closely. But what a great ride. What a great ride silver has been. Okay. So let's look at our daily chart while we're waiting. And what do you guys know that I always say? 90% of trading is patience and waiting. Waiting for your right setups, waiting for your trades to play out. 90% of trading is about waiting. And some people have a hard time with that. Some people will FOMO into trades because they get bored. And so that's part of your trading discipline. Don't FOMO into trades because you're bored. When we've got this kind of choppiness going on, it's just not worth it. You'll lose too much money too quickly. So don't FOMO into trades. Wait for your A1 setups. That's what I call them. They're A1 setups. When we see everything, all the stars align, right? All the stars align. We're in the right location according to the VWAP. We've got our moving averages testifying. We've got our MACD agreeing. We've got the RSI is not too overbought, not too oversold. Our volume is helping us by telling us, are we pushing or retreating? Even our VIX helps us. So all the stars align when you get your A1 setup, and that's when you get a higher win rate, you get more probability. Remember, trading is not predicting. We can't predict, but we can play the probabilities. And so that's what I try to do, is play those probabilities. All right. So let's take a look at the daily, and I'll keep this in my side view mirror. Remember, to the downside, I'm waiting for a break of the VWAP. So even though it looks like it's kind of downward trending here, I'm not going to take that, even with the MACD looking a little bearish here. I'm not going to take that trade until we actually break the VWAP, because we've been pretty bullish today. And I'm going to wait for the upside to give us a good break of this high. I might, like I said, if I see the MACD rollover and the whole moving average pushing up, I might consider a call, but again, it would be a little riskier because the high it's just right here. It's not that far away. Now, the farther down we come, the more attractive that trade looks, right? Okay. Daily on the SPX. Let's take a look at what we got. I chart the SPX. That's the index. That's the top 500 stocks, the S&P 500. I chart that. I chart the SPY. That's the ETF built over the index. And I chart the futures. That is ES. That is those are the futures of the S&P 500. So I chart all three of those things, even though those charts are really, really almost identical, moving in lockstep. I do chart them a little bit differently for different reasons. All right, little push down here. See why it's good to wait. See why it's good to wait for the MACD to confirm, because that was a little bit of a trick, right? Looked like they were going to push it back up, turn the whole moving average, looked a little suspicious, like a push to the upside, but no, the MACD never did confirm it. And so MACD will save you a lot of times if you wait for those confirmations. Now, it's true that the MACD is a lagging indicator. So, sometimes it gets you in too late and it is a losing trade. But by and large, the MACD really does give us a good idea of what's going on. All right, back to our daily on the SPX. And here it is. Let's make sure you guys can see that. Yeah, that looks pretty good. All right. So if we look back, we've got this kind of significant dip that happened in November. And we've really been in what they call a buy the dip environment. Or some people will say BTFD, buy the freaking dip. We've been in a buy the dip environment. These have been nothing more than bear traps, right? Every single one of these have been nothing more than a bear trap. Now, this one, of course, you could have played that nicely to the downside, but most of these have only lasted a couple of days, and then boom, they're buying the dip again. The buyers come out. And this is no different. This time is no different. So we've had a pull back here, buy the dip, pull back here, buy the dip, pull back here, buy the dip, pull back here, buy the dip. And if you go back a good amount of time, you'll see that pattern replays for the last couple of years, with exceptions of some of these types of drops. All right, big push right here. I like this. I am going to load calls, but I'm not going to get in yet because I don't like to get in on these big bars. Sometimes those retrace back down, but I am noticing that they're not going to let it drop right now below the VWAP. So I am going to load 692 calls, but I am not in them. I don't like trading these big bars. A lot of times we'll get this little retracement candle. Our MACD is not rolled over yet. And when we get these big pushes, it takes even longer for the whole moving average and the MACD to respond. It does take time. And now here we are right back to the range. Got to be careful here. 692.7.8. That is a strong push. And these types of moves are very hard to take advantage of because they're so fast, it's hard to get in. Big drop on the VIX. A little pullback here would be lovely. Nice volume. MACD rolling over. Hull rolling over. All right, I'm going to give this call a go. I'm in, punch it. And a little slowdown on this candle. What I'd like to see is a test of this top right here. Oh, gosh, I just switched to Meta. No, I don't want Meta. Let's go back. There we go. So I'd like to see a little test of this top right here, 693.3. It's about 4 points overhead as we measure on the SPX. Little slowdown right here. Let's give it a push. We are back in the range, which I don't like. So hopefully we didn't just get stuck in chop. Let's see if we can continue a push to the upside. That's a little better. There we go. I'm going to get out right here, punch it. I think that's about 5%. Let me check real quick. Actually, more like, I want to say 4, but I think we might continue on up. But that was a quick exit. Hopefully, if you guys followed, you're able to jump out because it's giving us a little red candle right here. And one little pointer for you, if you're following me, and we get into a trade, there you go. If you guys are still in, there's a nice little push. If we get into a trade and you're following me, it's good to have your sell order ready to go. I keep mine right under my fingers. So I set this, as soon as I get into the trade, I set the sell order where I only have to execute it with one click. And that way I'm watching these candles, and the second I see what I want to see, boom, I'm out. So if you guys are following me, that's a little pointer. It'll help you follow a little bit more quickly. Don't wait for me to say, punch it, I'm out, and then set your order. Go ahead and have your order ready to go so that you can just execute with one click. All right, that'll help a little bit. So I don't know if anybody was able to follow on that one or made any money, but we got a little bit, and it looks like it's still going to push. I think we'll hit this top. I think that's where we're going. So that was a quick little trade there. Looks like the VIX is still moving down a bit. Now let's get back to our daily summary, because this move is over for me. Now that we're getting a little closer to the top, what I will trade is a break of the top. So that I'm going to watch, right? So if we come up here and break this 693.4, I may go ahead and trade that, but I'm not going to trade this distance from here to the top. It's too small. So this is the current top. It doesn't mean it will remain the top. If we come up and push through it, we'll make a new high. But as of right now, I won't trade that because the distance is too small in case we get a reject of this level, right? And I think eventually we're going to push up through that. We've got gamma, positive gamma, sitting at 695. That's where the call wall is. I think we probably will hit that today. 695 is probably where we're going, but you can't bet on it. You can't guarantee it, right? You've got to let your charts tell you what's going on, right? So let's take a look back again at the daily. So here we go, pushing this top right here. We'll keep this in our side view. We're going to finish talking about the daily. So what I was talking about was buy the dip, BTFD. And we are just a stone's throw from the all-time high. All-time high sitting right here. This is SPX, right? Remember, that's the index, the S&P 500, 6986. So just a hair below 7,000. And that 7,000 has been an area of interest for weeks. We have seen options volume, gamma volume. We have seen volume building at the 7,000 strike on the SPX. But look how long they've taken to just dilly-dally around. They're not hitting it. They know everybody's watching it. So they just kind of dilly-dally around, don't they? And the other thing is we have major earnings coming up next week. We also have an FOMC meeting, and we also have President Trump speaking twice. Volatility spikes that we could see. We could either come up and blast right through that 7,000, or we could take a bit of a flash crash. I think that could also be in store. So I am not going to trade anything long-term, which I don't anyway, but long-term, I would wait if I were a swing trader to see what we get when we start getting into earnings. So now remember, earnings, the big boys, the tech titans, the Magnificent Seven, Apple, Amazon, Meta, Microsoft, Tesla, Google, NVIDIA. Also, we have Broadcom as an eighth one. Those are the techs. They are the Hercules of the stock world, and they are what keeps the S&P 500 afloat. They are what keeps the NASDAQ afloat. And as they go, so go those indices. So as we await big tech earnings this week, the market is a bit on pins and needles. It's a bit holding its breath, kind of moving. You can see on the daily, kind of just moving sideways. Even though these ranges are decent, we're still sideways. That's what all of this is right here. This up, down, up, down, up. There's a slight increase, but it's not very, the angle isn't very strong, and it's not very fast. It's more very slowly creeping up. So we are just a little bit away from this all-time high. So 69.55 is where we're sitting right now. 69.86 is the all-time high, 30 points overhead. Could we hit that today? Absolutely. And 695 SPY would put us right there within a hair's breadth of 7,000 on the SPX. Could we hit that today? Absolutely, we could. And will we? Maybe. The market is kind of waiting to see what's going to happen with earnings. So Meta, Microsoft, and Tesla are all going to report on Wednesday after the bell. We don't get to trade that until Thursday morning. So you kind of, if you're one that trades earnings, I am not. I find earnings trades very much of a gamble, very much of a crapshoot. I don't trade earnings. But if you were one that did trade earnings, you basically have to place your bet before earnings come out on Wednesday afternoon. And usually on these big tech guys, those are going to be expensive. They're not cheap options because the volatility is high, and they get more expensive. As the volatility moves up, options get more expensive. So it's a big gamble. In my opinion, it's a big gamble. That is the one time when you really do see technical analysis kind of goes out the window a little bit when we watch earnings. You can see a company absolutely kill it, just kill their earnings, and the stock dumps for no apparent reason. They'll usually put something on it like, oh, the forward guidance, and no, we didn't like what the capital expenditure, whatever. They'll put reasons on it. But a lot of times you can see a company absolutely kill their earnings and dump, or you can see a company absolutely just trash earnings and they climb. So it's very much, in my opinion, it's just a throw of the dice, in my opinion. It's a crapshoot. But what we do know is when we're trading this market, volatility is going to start increasing. So that's what I'm watching for as we move into this week, into Wednesday's earnings and beyond. I'm going to be watching for opportunities for this market to move pretty significantly. As a day trader and a scalper, when those moves happen, that's where we make the most money. So like, I got my little 4 or 5% on this rise, but when you've got volatility, boom, that's where you make the money. So it looks like Gavilan got 17%. Beautiful. Excellent work. All right, Dana, turn on your ring light. It's hard to see you. Oh, all right, Dana. Let me get that in just a second, okay? It's funny though, because my camera does really well on different video streaming platforms. It actually seems to kind of act differently, even though I'm in the exact same environment. But yeah, Dana, I'll look for that ring light in just a second. Okay. So let's take a look at what our VIX is doing here. So on the minute chart, the VIX is coming down, but we're getting a little bit of a push. And here is exactly what I was thinking would happen, right? Look at this top. Do you see my cursor? I'm going to put the line right there. Do you see the wick on this candle matches this candle almost exactly? And that is what I was saying when I said, we started getting this push up with these two really big candles. And I said, is there enough juice to make it worth the squeeze? There was barely. I eked out a little 4 or 5% winner, but look what it did. It held this most recent high, which is exactly what I thought that it might do. And that's where it becomes a little bit more risky. So that's why I jumped out quick, take my little gain. I'm fine with that. I'll make a bigger gain later as we increase the volatility. Right now, we're just sideways. So these are the times when we've got to be more cautious. When you can see there's a clear range, if you decide to trade it, be cautious. That's all. Take your smaller wins. Okay. All right. So let's talk about the VIX here. We're looking at the minute chart. I'm going to go ahead and pull up the daily chart so that we can see what has the VIX been up to. Because as we move toward these earnings, as we move toward the FOMC, and we'll talk about FOMC in just a minute, as we move towards FOMC, we are going to see the VIX start to move. It's going to start to move. All right, Dana, what does it mean when the SPY 69 call expiring today is the exact same price as tomorrow's 692 call? They're both at 245. That's an interesting question. Let's go look at that, and then I'll get back to the VIX here in just a second. We are getting a little pop on the VIX. That is something to be aware of. But yeah, let's take a look at today's 691s. Sitting at 220 right now. Tomorrow's 692s. Yep, sitting roughly at the same price. You know, it's really, it's just the way the options are being priced. We don't have huge prices for tomorrow. That means we don't have a ton of implied volatility, and that's okay. The 691 is in the money. And so obviously that's going to be, it's in the money by about 3. So that's going to be a little bit more expensive. And then we've got the 692s. They aren't in the money quite as high. So it's just the way that they're being priced. There's not a ton of implied volatility. So we're not seeing huge prices at the money options for tomorrow. So it doesn't really mean much other than that. There's just not a lot of volatility for tomorrow implied at the moment. That can change at any time. That can change at any time. All right, back to the VIX. So I'm going to pull this up, I guess. Let's do it this way. And let's go to our daily chart. But great question. Thank you for asking, Dana. I appreciate it. All right. Now, if you remember, last week we talked about, before we hit this spike on the VIX, we talked about this rising bottom. Do you guys remember that? We've been analyzing this daily VIX chart, and we've been noticing the rising bottom. And actually, we're really still are rising. If you notice, even though we got a little bit of a flat line here, it's kind of, that bottom's kind of pushing up again. So that is something to be aware of. We hit a low over here at this 13.3 bottom, and that was corresponding on the 24th of December with, as you can see over here, where's December 24th? With a high, right? So that was a high on December 24th for the moment, right? It's gone higher since then, but December 24th, it corresponded this low. Remember, the VIX is inverse to the indices. So the VIX comes down, the markets go up, the VIX comes up, the markets go down. So we got this low December 24th at the end of the year. And then at the new year, all it's really done is climb, 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 even though the market sort of went, it went a little sideways, came a little bit up, went a little bit down. The VIX just kind of stayed steady here. But what did it do? We got this 2-day spike here. This day, we hit a high of 19.5, and the next day we hit a high of 21. So that was on the 19th and the 20th. Let's take a look at the 19th and the 20th. What happened on the 19th? We had a down day, a little down day on, sorry, that's the 16th. Hello. Where's the 19th? Did I say 19th? I'm sorry. That is the 19th, but we weren't open on the 19th. The VIX must have been, the VIX must have been running on the 19th. But the market was closed for Martin Luther King. So interesting, right? So we got this gap up as a warning that the 20th was going to drop like a stone. It did. It just whoosh. We got like a 2% drop that day, which is pretty big for one day. We had a 1% gap down and then another percent lower. So that's pretty big drop there. And the VIX kind of told us that was about to happen. It started spiking even here on the 14th, pulled back a little bit, and then just boom, big spike, and then boom, got knocked back down. So we hit this low, and then VIX got knocked back down, and we started climbing again. So that's our environment. But what do we notice? We're still, even though we've had these blips, we are still making a rising bottom. We've pierced it a couple of times here and here, but we're still kind of making this rising bottom because the market is getting a little bit more on edge about earnings, about FOMC, about even President Trump speaking. He can affect the markets as well. So that's our analysis of the VIX. Let me go back to our minute chart, and then let's talk about FOMC and how that affects the markets, because that is a big deal. FOMC, of course, the Federal Market Open Committee. They determine the federal fund rate, which by default, in a roundabout way, determines a lot of the interests that we see in society. The mortgage rates, the savings account rates, those, even to some, not really credit card rates, but auto loans, those sort of things. You do see the federal funds rate. Eventually that will trickle into the economy. So it's a big deal. And the market watches the Federal Market Open Committee for how they are going to decide to set rates. And I'm sure you've all heard about, they're going to raise rates or they're going to lower rates. Well, we have just moved into a period of lowered rates. So the FOMC has been lowering rates. However, are we going to continue to lower them? That's the question. And it's a pretty well foregone conclusion that we're not going to get a rate cut at this January meeting that's coming up on Wednesday. And we're probably not going to get a rate hike. We're probably going to stay the same. And the idea is we'll probably stay the same for maybe the next several months. So we have President or Chairman, Federal Chair Powell, Jeremy Powell, is stepping down. His tenure is over. He steps down in May. And then President Trump will appoint the next federal chair. And everyone's pretty much, it's a foregone conclusion that this is going to be somebody who's going to be what we call dovish. He's going to probably want to continue to lower rates, pump money into the system. That's what they call quantitative easing. They're basically just pumping money, free money back into the system. And that makes the stock market go up. That's why we've been going up. But it also makes inflation go up. So the feds also have to be aware that as they pump more free money into the system, inflation goes up. Things cost more, right? If you, pay $20 for a burger, you're going to have to pay your employees, more than $12 an hour, right? It's just inflation. It's just the way it works. So the FOMC has a great deal of power over the stock market. So we'll be watching that on Wednesday. We'll be watching earnings on Wednesday, and the market is slowly increasing in volatility, little by little, kind of inching up, kind of creeping up. So just be aware of that. As we move into this week, we're going to have to be watching for we can see quick drops or we can see big pushes. Either one. In a higher volatility environment, we get either one of those things happening. All right, so that's our daily analysis right there. That's our VIX analysis. Let me get back to my minute chart because we are still ranging. There is still no trade here. Look at this range. Do you see it? Over, under, over, under, over, under. We are not going more than just a couple of points. This right here, this is not worth a trade because if you bought, let's say you bought like a put here. Well, what's it doing? Nothing. You're losing money. If you bought the put here at this turn, you're losing money. So you got to be careful in these ranging environments. So right now, I'm just watching. I'm a bystander. Let's get back to the futures chart so we can look at that. All right. Here we go. So again, just not much of anything happening. And let's take a look. I want to see what USAR is doing. It's come back down again. So USAR has been an interesting one to day trade today. We can go look at that chart here in a minute because we don't have any trade on the SPY right now. And like I said, I did day trade USAR earlier, but let's see. We're getting a little push here. So let's see what we do here before I switch over to USAR. I do want to see what we're going to do here because we're getting a little close to this temporary high. This is the high, but this is the most recent high, this one and this one. So they're the same. It's almost a double top. I mean, it's not a top. This is the top. But when we make two highs like that, it's kind of giving us a little resistance zone. So I'm going to watch and see if we break upward through that zone, or if we continue to range sideways, or if we get some kind of a downward push, which we really do need a bit of a downward push. We've kind of been really mostly up today. So if you take a look at today, we opened up and climbed, leveled off, climbed, leveled off. So we climbed a little bit here, but mostly we're level. So just sideways, but we haven't really dropped yet either. So we could get a drop. I'm watching for that, but I won't trade that, like I said, until we get down through the VWAP. That's my area. That's my line in the sand for a downward trade. All right. But USAR has been interesting to trade. And we'll take a quick look at it. We can see what's going on over here. I'll keep my side view up over here. Take a look at USAR. Big swings today. Even though if you zoom out, you don't really, it doesn't look huge. It really is huge. At one point, it was up, I think, over 20%. And then it did this drop. I traded this rise right here, and I just made 10%. You know me, I don't swing for the fences. I saw this kind of bottom out here, and when it started curling up, when the MACD curled up, and when the whole moving average curled up, I did jump in there and take a trade. So it didn't quite hit the VWAP, reversed again, and now it looks like it could be wanting to move back up. We're getting a little MACD move, and the moving average is curled up. So, could we trade that? Maybe. It is still below the VWAP. I think it might be a decent trade. And the options weren't super expensive. I think it was like $300 for one contract, which I didn't think was bad, given as much as it's moving today. So that is one that we could look at as well. MACD's slowing down just a little bit, it seems like. All right. So I'll keep my eyes on this one. I might day trade it again. I don't know if I'll take this move, but I might day trade it again later today. Let's see if they try to bring it down some more. It had, if you look at the daily, it had just this huge gap, and then kind of a reversal off that top, right? Do you see what it's doing? By the way, this is Rare Earth Inc., and I think it was the United States took a stake in it, and so that's why it jumped so nicely. So you've got this nice gap up right here, and you got a little gap here. It makes you wonder if somebody might have known something, but the news came out over the weekend. So big gap here, pushed all the way up here, and now it's kind of retracing back down. So that's normal. It's kind of, think of it as like a rubber band being stretched, right? When you see this kind of parabolic move, you would expect to get a bit of a pullback. That rubber band is going to snap back. It does, because that's pretty extended, pretty huge upward move there. But I would still be willing to day trade that today. I have a feeling it could bounce back up again today. It's at 12% plus. All right. The Maddie is here. Welcome. Hello, Mel. What site do you use for news? That's a great question, Maddie. I use a lot of sites, to be honest. I like Yahoo Finance. I have lots of headlines that come across my phone because, all right, I do kind of like this move up, guys. Hold on. I'm going to move over to the SPY. CNBC, Yahoo Finance, who's the other one? A lot of different headlines come. Oh, I like investing.com. They've got really good articles. What's your go-to for red folder news? Sorry, what's red folder news? I'm not sure what that is. Okay. I do kind of like this push here. The MACD is starting to roll up. You can see it right there. The hull has tried to roll up, but we are again pretty close to this top. We're about just 2 points away. Market moving possibilities. Yeah. I do like investing.com. I think that's a great website. All right. Looks like the VWAP giving us a little drop here. But also my phone knows, right? So it's constantly giving me Google News, Yahoo Finance, CNBC, investing.com, like all those, they all come across my phone. All right. You're very welcome. Thank you for the question. I appreciate it. It's a great question. All right. I'll push through this top and I might jump on a call. Again, it's not a top. We have a top over here, but it's these two double recent highs. I am going to look at the 693s. They're pretty cheap right now. I'm going to look at those. 693 calls. And I'm looking for kind of a strong push right here in this area, this 693.3 area. What I want is this range to break. So it's been ranging. We're building this little top of the range here. And I want this to break. I'd like to see it break to the upside. So I'm going to watch that. And I'm also checking on the VIX. All right, USAR is climbing again. No push through yet. And just not giving us an entry at this moment. Still trying to be a little toppy right here. No trade just yet. And the other thing to be aware of, always in my watch list is the Magnificent Seven. And we did talk about that a minute ago, but basically I'm always watching what they're doing. What is going on with the big players, because those are the ones that are pulling up the S&P 500. So Apple today is the big leader, right? Apple is up almost 3%. And it's been a long time coming because Apple has been beat down for a long time. So good to see a little bounce on Apple. Also a bounce on Meta, sitting at 2.2. Remember, Meta reports on Wednesday night. Google sitting at 2.1. Broadcom sitting at 1.8. These are percents of an upward move. Microsoft 1.5, and MAGS as a whole, the whole ETF, sitting at 0.8% up, while the S&P is sitting at 0.5. So does that tell us we might have some upward move? Yeah, it's possible. It's possible. Tesla's down 2%. So that's going to weigh us in the other direction. But overall, that's why I like looking at that MAGS ETF, because that puts them all together and gives me a cumulative movement. So that's why I have that here, right here on my watch list. Okay, here's another attempt at this top. If we push this through, I might jump in. Brightening up the MACD again. 693 really acting as a resistance. So our high again, 693.4. Our this high, 693.3, 693.3. Right now we're sitting at 693.1, but it's been acting as a little bit of a lid. I do think we can push through. We've got volume at the biggest volume sitting at 693 on the call side, which is of course right where we're at. Then we've got some growing volume at 694. All right, there it starts to go. But we've also got big volume at the 692 puts. So that's really where we keep toggling. That's the range, right? 692 down here at the bottom of the range, 693 at the top, small range. Aggie, why is it so low on volume? Great question. Because there's the algos are kind of turned on right now. Chunking sideways is what we're doing. The volume is low because we're just not doing anything. We're just ranging. And they do this, I think, personally, for really the main reason is just to burn out the time value on these 0 days options. If they can burn out the time value, then they win, right? Even if you get it right, even if you get the call, let's say it's calls, and you get it right, if they pull it sideways long enough, it doesn't matter. They're going to burn up your time value. And that is one thing that you see a lot. You see them pulling almost every day. You will find a range of time, a space of time where the markets pull sideways for a good bit of time, an hour, 2 hours, sometimes all day, sometimes just a few minutes. But when you see that happening, this is why the resistance from the 5-minute opening, you have the opening range also here, BD, good eye and good. My opening range at the 15-minute level sitting at 692.4. The 5-minute is going to be somewhere in here, but yes, correct. This green line right here is the high of the opening range that I have marked on my chart. And you're correct. We've been really using it as support here for the last, hour, 45 minutes. Support, support, support. It has not beaten this opening range, which also corresponds with the 692 puts that we keep seeing. So we've got 692 puts in play and we've got 693 calls in play. And that's where we're at right now, right in between the two. All right. Yeah, so great point there, BD, and great question, Eggy. And again, not beating this top, just not beating it. So like I said, I would not take a call unless I saw a strong push through this 69.3 level, and we just have not seen it yet. Just haven't seen it. All right. There's a little push happening here. MACD brightening up a little bit. Do we want to try it? 693.2. Do we want to give this a shot and see if it pushes through on a bigger volume? All right, Eggy, my VWAP is closer to the candle compared to your chart. -2 +2 day, my settings. Those are the right settings. Those are the settings I have. Let's see, Eggy, let's take a look at VWAP. I have VWAP sitting at 692.2. All right, volume picking up here a little bit. I do kind of like calls here. I'm considering just watching this level right here. And we are getting close to the end of the stream. We did take one trade. It was a tiny one, little winner. Um, so we are getting close to the end of the stream. In fact, we are at the end of the stream, but I am really strongly considering this call here. If you decide to trade this, just watch for a nice break of this top. That's what I'm looking for. Well, and there it goes. And then, so trading plan for the rest of the day is I'm going to be looking for, to the downside, a break of the VWAP, but a significant break, not just a look below and fail, an actual break of the VWAP to the downside. All right, I'm going to take this call. And I don't really want to extend the stream, but I am going to go ahead and get in here. And let's see if we can get this to jump up a little bit more. And I might have to end the stream while we're still in the trade, but basically I'm not looking for a big win because we are pushing a top here. So let's see if we can jump up there and rehammer that high. 693.4. And our price is pretty high over our moving averages. So there's a nice push. I'm going to get out here any minute now. Right here. I'm out. That's 5%. Hope you guys caught that. That was a nice little trade right at the end of our stream. And we talked about the VWAP. BD was in at 80, out at 93. Look at this push, guys. Look at that. Bravo. We got a nice trade, y'all. BD. Back to the futures for the rest of the day. You as well. And thank you guys so much for joining. Huge. But you know what? Those base hits add up, guys. I'm telling you, trader, and this is how I do it. Thank you for following me. I'll be back tomorrow at 9 Mountain and 11 Eastern. And thank you again. I'm really getting to know and enjoy your guys's personalities and company here. So thanks for following me. Thanks for being here. We'll be back tomorrow. Have a great rest of your day. Trade safe, and we'll see you tomorrow. Bye for now.